Oh man, so it looks like we're getting a bit of buy the dip in the market as some fears have started to ease. So we know we had the troubles in Washington where lawmakers were arguing between Democrats and Republicans about the debt ceiling. We still need a resolution before the end of the month. We know that we've got the ongoing kind of ever-growing crisis, which has kind of subsided a little bit, and the market's not too worried about that right now. But the biggest issue is this issue around inflation and supply chain shortages. We know we got the tapering issue, but the markets seem to be shrugging that off. They kind of expected it. They know, tapering is going to be here soon, and they're not too worried about that. What they're really worried about is this concern around inflation and inflation being more persistent. We've spoken about that at length on this channel, and we saw a brief rotation away from high growth companies. If you don't understand why, please go check my other videos talking about this, explaining clearly why you get a rotation away from high growth stocks, your favorites, your Enphase, your Tesla, your Matterport, all these kind of companies, Lemonade. The reason why you get these during a scare around inflation. Okay, so let's take a look at the markets, and we can see today we've got a bit of a rebound. So we can see the S&P has opened up. The market's closed in another 5 hours, which we can see here, but the S&P is up. We can see currently 0.2%. The Dow is up 0.17, and the Nasdaq is up 0.3. To put this into context, Nasdaq dropped 2% yesterday afternoon, so we're getting a bit of a bump back in the markets, and it looks like the markets are starting to buy the dip, which is exactly what I did. Check out the video if you haven't. I topped up on 2 high-risk growth stocks yesterday as I saw the price was too juicy. So go check that video to find out how much I bought and why. But for now, you can see that the market seems to be doing the same. And it's got some people thinking that, hang on a second, maybe we're not going to see the 10-15% correction people were expecting. Maybe there is still too much money in the markets and these dips keep getting bought. And this is what we've been saying for a while, guys. You know I want to wait for a nice 15-20% dip, but we're not getting one. And that's how when I'm seeing these 5-6% dips, I'm buying my favorite stocks, I'm nibbling, I'm buying decent amounts because I can't wait and just try to time the market. Maybe we'll never get that 15% dip. That's why you need to have your price targets and don't wait, because this market can just rebound and go straight back up, right? And you'll miss all these opportunities. So it's really important that you start nibbling. There's no promise that your favorite stocks are going to tank all the way down. So start nibbling and getting your entry points into your favorite stocks. And as you can see, we got the 5%. Let's go show you the S&P. I mean, from this high here on the 2nd of September, let's take that down to where we are now. You've seen a 4% drop in the S&P. Okay, so we've had a 4% correction, nowhere near the 10-15% which some people were telling us we're going to see, but it's something nonetheless. So let's take a look at how the markets are rebounding today. I mean, of course, you've got all the Bitcoin plays really bouncing back up. Bitcoin is hovering right now at $50,000. Again, go check out that video where I've made about Bitcoin and where Bitcoin can head to next. But you've got Marathon sitting 5% up. You've got Riot 3.6% up. Hut 8 3% up. And again, these are very obvious, right? When Bitcoin does well, these plays will do well. There's no confusion here around that. And BTCM doing well as well. But then you've got your SPACs rotating away as well. So, you can see Affirm doing well. You've got Matterport in there. You've got SoFi climbing as well, 3%. So again, these high risks, right? So Matterport was the one I purchased. Lemonade, I purchased some as well. So you can see these are really bouncing back because people are seeing these as dip opportunities, right? And they're buying into these because they can see the prices are just getting crushed. And we may not see a 10-15% correction. So it's better off starting to make your purchases now. Square, I topped up a bit more Square as well. Square is doing well at 3% up. Nvidia up 3%. Enphase, I've got a big position. Enphase 2.6%. What else have we got up? So Robinhood is even up 2.4% despite some of the legal worries around their lawsuit amidst the GameStop saga in January. Monday.com doing well. This is one that I've not quite built a position in just yet. I'm still observing it, trying to learn a bit more about Monday. So if you're interested in Monday.com and you want me to do a deep dive, comment below and that might give me the impetus to actually sit down and do it. Snowflake doing well, 2% up. The market's really rebounding here, but obviously by the time I post this, given how yo-yo this market is, this could dip back down again. But for now, investors seem to be buying this dip and all the major indices are up right now. So that brings us on to kind of some of the macroeconomical challenges we're going to be facing. So obviously we mentioned we've got concerns around inflation. We mentioned that Fed Chairman Jerome Powell said he wants to see one more good jobs figure before, the inevitable tapering starts to occur. So what does that mean? Let's take a look. Well, what we have here is we know that we get the September CPI reading on October the 13th. Okay, guys, so mark your calendars. That's going to be interesting for both crypto and for the markets, right? So if we see an inflection point down in our CPI reading, which we know was at 5.3%, if we see that ticking down, that is a good sign because it means inflation's cooling off and can give some more confidence to rotate back into growth stocks. However, that could be a negative for crypto, okay? Because crypto is seen as this inflation hedge. It could have an impact, although at times we've seen it decouple, so it's not as straightforward as that. The other thing we're going to see is our non-farm payrolls, okay? So we're going to, on the 8th of October, we're going to hear our September reading on the jobs report. Really important that not only are we listening to the number of new jobs created, but we're also looking at the wages because we know the rising labor costs is contributing to inflation and having an impact on many companies, okay? So we've got those two, and then after those pieces of data, we've got a couple of weeks because the Fed don't convene until 2nd to 3rd of November. Okay, so we've got a bit of time to mull that data over, and we suspect Jerome Powell could be announcing a November or December taper. Okay, so really important that we understand that. But more importantly, we want to understand the concerns around inflation. And that brings me on to the next point, which is the market is going to be a little bit nervy going into this month. I mentioned, obviously, you've got the issue with the debt ceiling, which needs to be resolved by the mid of this month. You've got the issue around inflation. But more importantly, we're going to see earnings come through this month, okay? So we're heading into earnings season, and we're going to get a whole bunch of earnings from CEOs. And whilst we know that growth has been revised down, Jerome Powell has revised earnings growth, GDP down, and we're expecting, slightly subdued performances, what's more important is the earnings calls. And I mentioned this before, we want to be listening to the CEOs and the teams to find out which companies are really suffering from supply chain shortages, because this is what investors are trying to figure out right now. How large are these supply chain issues? How much of an impact are they having? And how long will they persist? Now, you've seen my video where I broke down what Cathie Wood was mentioning around the double and triple ordering problem. And I think this is going to be really pronounced as well. I would not be surprised if we get a couple of companies, a couple of prominent companies who mention that they actually have excess inventory. So whilst the market is worried that there's not enough raw materials to produce products, I think we could get the other issue where companies could be sitting on excess supply. And that could be a concern for the market as well, because now you have a double, triple supply problem where you've doubled and tripled ordered, but the demand is no longer there to fulfill the purchasing of those goods, which means you have to push prices down, but then that could resolve the inflation trouble we're seeing. Okay, so a really important earnings season, not just for the headline, revenue and earnings figures, which we normally see, but really listening to those earning calls to find out, is this inflation and supply chain shortages here to stay? Are we seeing labor costs going up? It'd be good to hear the narratives around these and whether companies are speaking to these during the earnings calls. So again, let's see where we're leaving the market off. We can see a bounce in the market, S&P up, Dow up, NASDAQ up, oil price has gone up as well, gold has gone down while Bitcoin is going up, whoop, whoop, and the Russell is heading up as well. So overall, clearly a buy the dip opportunity. Let's head into the charts for some of these. Let's look at, where's the SPY? Let's look at the SPY, and we can see this is on the daily chart. We've got a nice big green candle. Okay, so this is your correction. So this is this is the level we're at. We're at 454, and we had a correction down to the low point, about a 6% correction here at the low point. Okay, but we've already bounced some of that back. So we're currently at I think it was a 5%, 5% correction currently as we speak. So let's look at the volatility index, which will give you an idea of the volatility in the market. Currently, it's falling down. A nice big red candle today, 21. Nothing major. You remember when we had the Evergrande crisis, this was really peaking up very high. So the markets are quite subdued right now. Not much news going around. We know there's this debt ceiling issue, which kind of the market's just hoping that these politicians just get on with it and sort it out, stop bickering and stop playing chicken. You've got the tapering concern, which people think they're okay with because, there shouldn't be a taper tantrum at this point. Although when everybody thinks so, that might be when they actually decide to have a taper tantrum, but that's a separate conversation. And then obviously you've got the concerns around inflation, and it's the broader concern around around inflation versus buying the dip, which is what we're seeing now, because the inflation fears are there, but at the same time, investors are seeing really juicy prices. They've got cash sat on the sidelines, and ultimately they need to deploy it. So just let's spend a few minutes looking at some of my favorites right now. So Enphase, one of the ones which I have a big position in. I mean, you can see the kind of pricing you're getting now. So I mean, Enphase in 148. The last time you saw this price was in June, and then before that in April. So you're really getting 5-6 month old prices here on Enphase, and these are good prices to be buying at. I mean, when you see that it's run up already to 228, even just recently we're hitting 200 levels. Enphase at 148 for the long-term solar play is a good play in my opinion. This is not financial advice. Lucid sitting at 24.45 seems like a far cry from when the lockout expired and it headed down to 16. Doing well now, keeps getting rejected from this kind of a level here. Let's just put in that level here. This keeps getting rejected at this kind of a level, 28.66 level. I mean, obviously it shot up originally when all that hype was going on. It's just crashed back down. This seems to be its new ceiling, and it really needs a catalyst. I was hoping, and probably when it gets its first cars off production, that it can really start pushing up for Lucid. Let's also take a look at Lemonade, which was one of the ones I purchased. Again, still dipping, and this is a great buy. I mean, I'd love to buy some more, but I've not got massive cash positions left. I'm pretty much invested at this point, but I'd be happy to purchase more Lemonade at 64. Matterport, again, something I want to be buying, but it's ticked back up again, which is unfortunate. I was hoping to get it back down to 1636/15 mark around here, and I want to be buying some Matterport in that region. Let's see if I can put a quick rectangle in. I want Matterport in here. If it comes in this box, I want me some heavy amounts of Matterport, but it may never get here, so I need to start nibbling. But let's see where this dip buying goes, and if it heads back higher, then we'll have to reevaluate. But if it comes down, I'm happy to be buying some Matterport Square. You're at good pricing on Square right now. If you're unable to build your position in Square, I think this is a really good position you're getting here. I mean, you can see this was acted as the support level previously before it bounced back up exactly where we are right now. And you can see it's quite an important level, even going back here. It's acting like quite an important level where it's at. So you may not get much cheaper on Square sitting at 233. And even at 233 right now, despite the bounce back it's had today, you've still back to the highs when it was sitting at 280s. You're still looking at a 20% uplift on your Square. For such an expensive company and such a robust company, I think that is a pretty good opportunity on Square. I mean, the RSI is very low. It's got a lot of momentum to kind of push it on and head back on an uptrend. So Square's a good purchase for the long run. Let's take a look at Tesla. Obviously, with their record-breaking deliveries, now on track for a run rate of 1 million vehicles a year, which is phenomenal. And Tesla's been on a nice uptrend here. I think you can see this, I'm just going to draw this really crudely. A nice uptrend on Tesla. You can't really complain there with Tesla. Okay, so Tesla's doing pretty well, heading on this nice uptrend up, and had a good couple of touches on this trend line. So want to see that we've beat the previous high there at 780, and it's got to break 800 for me now. Tesla's really got to break the 800 mark. Let's put that in as a psychological level. That 800 level is going to be a key level from a psychological perspective. You can already see here we got rejected on this candle. We kind of ticked at 806 and came back down. So Tesla's got to deliver some good earnings. Their earnings are around the end of the month, so that could be a catalyst for it to kind of wedge above the 800 mark and head higher. Absolute great stock to have in your portfolio at this point. At such a big market cap, you can't really go wrong on Tesla. Yes, there might be other stocks which have higher momentum and higher growth rates, but in terms of what companies are changing the world, and that's how I always like to reset my thinking, you can't go wrong with a bit of Tesla in your portfolio. Let's look at Robinhood. I've not looked at Robinhood for a while. Let's take a look at Robinhood. Robinhood pretty much been crashing and burning ever since their IPO, and you can kind of see created a re-bump here at kind of 48, 46, sitting at 42, not super juicy to buy. I mean, you've had this in the high 30s, 38, 39. Although if you wanted to build a position, you could probably start nibbling on Robinhood. SoFi, for those of you in SoFi, I've got a small position in SoFi, not the biggest, really. Another SPAC play, high risk. and it's kind of fallen quite a bit off its highs. So really, you've had the opportunity to buy this in at 13s, now sitting at 16. So far, it's been a bit of a roller coaster, to be honest, if you look at it. So really want to see this kind of settle down and form some patterns before we can kind of see how they're going to do. Maybe their earnings here in December could provide some input into what they're doing and how they're getting on with their mission. We covered that in a video, so feel free to search my name and SoFi to get an understanding of SoFi a little better. Let's look at Palantir. Palantir hit its ceiling at 29.37, which you can see 2 attempts at that. Couldn't break it. It just can't get above the $30 level. It's coming down now. You don't want it to break really the $21 mark, because then it wouldn't have created a higher low. So you want to create a higher low so you can keep this uptrend. You don't really want to be breaking this uptrend. Yeah, it's a bit of a tricky one there. You kind of want to keep that. You don't want that to break there, so you want this to kind of be bought up shortly. Otherwise, you're going to head a bit sideways on Palantir, which is not great. I've covered that in a lot of videos. Palantir, they've got to diversify their income. It's going to be really important in their next earnings that they show that they've managed to diversify away from America and away from government contracts, and have managed to get more commercial contracts. That's going to be really important for institutional money to really plow into here in a heavy manner. Coinbase, this is one I've kind of taken a burn on. I did start buying this just excitedly at the IPO, which I shouldn't have. Kind of learnt my lesson on that one and didn't do that with Robinhood. I've managed to average down pretty well. I've probably got a cost basis which is still higher than where we're at now, but I don't really want to plow much more into Coinbase. It's kind of bottomed. The first bottom you can see there is at 212. That's the lowest. And then you've also got a bit of a bottom here at 225, which it seems to be respecting at the moment. You want to see it kind of climb above this 280 mark to head into new green. But at the moment, with all the regulatory concerns and all they had to scrap their lend program, Gary Gensler's giving them grief, issues around stable coins, SEC had subpoenaed USDC, Maker, Circle, loads of stuff going on in the space, and it's not conducive for a run on Coinbase. But I definitely think once the cat is out of the bag on Coinbase, this can go on absolute tears. I mean, this just reminds me of early Facebook. The technology and the space they're in, and the amount of and the user growth is absolutely phenomenal. Just go look at the 8Q reports, and you'll be shocked at the growth. The growth is phenomenal, and I expect if they deliver another amazing earnings growth here in November, they can move from strength to strength really on Coinbase. We can break out of this 280 mark for good. I think that's the next aim for Coinbase. So there you go, guys. Quick look at the markets. Let's take one last look at S&P. It's like we have to keep checking on it in case it panics and dips. No, we're still green. That's good. By the time I upload this, it might not be green, but that's where we're at right now, guys. We've got a whole bunch of concerns still here in October. The market is concerned about various different things, ranging from the debt ceiling crisis. They've still got a little bit of Evergrande in the background. It's not quite resolved itself fully. It could re-emerge, right? So people need to be cognizant of it, but it's not really ruling the day. What's ruling the day is this fear of inflation. You're getting rotation out of growth stocks, which is what the dip was yesterday, but then the buy the dippers have been in today. It's just about now how much buy the dip momentum is in there. Is it a little bit and then it's going to head straight back down, and therefore it's a bit of a dead cat bounce? Or is there true buy the dip strength in there that the market is saying, no, that 5% correction was enough. We're not heading any higher. We're not heading any lower. We need to head higher and higher, because that's going to be the key here. If it isn't, and this buy the dip is doesn't last very long, then we could be getting another 5 to 10% correction. But I think the consensus really amongst investors at this point is there's too much cash on the sidelines, and every time we've tried to have a dip on the S&P, it's not materialized. Ultimately, people have come in, bought the dip, and we've not had sustained dips, which is what we're used to with the S&P. We're used to sustained corrections where you can take your cash and throw it into a dip, but right now you're getting a bunch of mini dips, and therefore as investors, we need to be aligned to that. We need to understand that and try to buy smaller dips more often instead of waiting for this massive correction, which may not never come. If it does come, we have to be prepared for it as well. But if it doesn't and the market just moves up, we can't be like, our cash was on the sidelines, we weren't ready. We need to mobilize our cash into our high conviction plays. So there you go, guys. Hope you found this useful. If you like this type of video on the markets, then please don't forget to hit the like button and subscribe so I know you like this type of stuff. And I will surely see you in the next one.